What does it really take to be a billionaire? Looking at Warren Buffett, who is valued at $112.9 billion, we're going to be breaking down his investment strategy and the logic behind why it is so important. Now, the Warren Buffett's investment strategy is really broken down into several steps. Number one being look for a margin of safety. This is really one of the fundamental things is you're not looking for investments that are going to lose money. When you look at cryptocurrency, when you look at things that are moderately to high risk, there is a probability that the risk return is not there. Now, looking big picture again at Warren Buffett and his portfolio, it is really value of stocks over an extended amount of time. Now, Buffett's goal is always to pay less than what the company or what the value of the stock is at. Too high of a purchase price for a stock that is excellent can undo the effects of decades of favorable business developments, which means not buying into stocks that are overvalued or companies that are very overvalued. Second step he looks at is focusing on quality. This again is, I feel like a lot of people miss the boat on this. He does not invest in junk. You don't see him buying businesses that are struggling, regardless of how cheap they are. One of the best Warren Buffett quotes that I want to share with you, it is far better to buy a wonderful company at a fair price than a fair company at a wonderful price, which is again the big focus on quantity. Number three, we look at don't follow the crowd. This again is a huge and extremely important for beginning investors, especially in a age of Reddit, message boards, social media, YouTube videos, everything else. Don't buy certain stocks just because everyone else is. You are purchasing on the way up if everyone is investing in it, but also do not always aim to sell stocks that everyone else is buying. Kind of counterintuitive. As Buffett says, the best way to invest is to ignore the crowd entirely. Focus on finding value in your own companies. Now, he also says in a quote, the most important quality for an investor is temperament, not intelligence. You need a temperament that either diverges great pleasure from being against or with the crowd. You're going to have to know yourself in that capability and exactly what you're going to do. Number four, don't fear the market crashes and corrections. This is again a huge part. Human nature compels us to do the exact opposite. If the market is starting to go down, a lot of people sell. It is kind of a panic rush. If the market is going up, then a lot of people start buying. That is the exact opposite, guys. That is the opposite of what you want to do. If you look last year, and again, example for myself, I dollar cost average every 2 weeks into the S&P 500. Looking at 2022 in its entirety, the S&P, I believe, was down around 22%, which means I have been buying it cheaper and cheaper and cheaper and cheaper systematically. Fast forward to 2023, where the S&P 500 is doing incredibly well. Portfolio's up about 35%, which I am very happy about. We all see people making money. We feel like we don't want to miss on it. It is kind of the FOMO that we have with the younger generation. A lot of people want to get in on the action before it is done. Most of the time, they are just left holding the bag, meaning that they're losing money on one of those or many of those investments. Buffett loves when a stock price drops because it creates an opportunity to buy it at a discount, but that is why 2022 has very active year. If you're shopping at your favorite store and you learn that the entire store was now 20% off, would you panic and run away, or would you buy more at that 20% discount? Opportunities come infrequently. When it rains gold, put out the bucket, not the thimble, to catch what you can. Number five, approaching your investment as a long-term mindset. When we look at the stock market, it is, again, general rule of thumb, guys, about a 10-year investment minimum when you're looking to put money into S&P 500 index funds, even stocks and bonds. You're not looking at what it is doing to the next 30, 60, 90, even year. You are looking at a 10-year forecast. And historically, you can look back, and I know it is not indicative of what a stock could do, but you can look at the prior 10 years, 20, even some of these companies that have been around for 50, 100 years, and really see where the value is and what the performance has been over an extended amount of time. Again, the shorter window that you view a stock or you view an investment, if you view even an index fund, chances are you're not going to have the ability to really get a clear picture of the data that you're looking at. And if you can't get into the forever mentality when it comes to stock investing, Warren Buffett argues that the best investment most people can make is set it and forget it with the S&P 500 index fund, which is my point, guys. I put every 2 weeks, we put money into the S&P 500. Again, dollar cost averaging in every 2 weeks, regardless of if the S&P is up or down, the money is going in. Number six, don't be afraid to sell in if a scenario changes. So this is really important to pay attention of news, pay attention of trends, things we're seeing in the market market, even the rise of AI, there are a lot of things that you have to pay attention to see the changes in the market, the changes in the financial institutions. When you look at the financial crisis, when you look at the tech bubble, when you look at some things, if the landscape changes overall in an overarching position, you want to maybe exit that position or maybe even reduce the amount of exposure that you have. Now, again, this is the reason why I go back to M1 in the S&P 500. The simple fact is, when you're invested in the entire market and across every sector of the market, it does take away a lot of the risk within that portfolio. Number 7, we get into learning the basics of value investing and investing in general. This is one, again, that a huge people miss. Guys, I did a video just a couple of videos ago about value investing. Value investors' goal is to essentially buy $100 worth of a company stock or less than $100. That is right. Ideally, much less, even less than that $100 mark. Value investing seeks out and invest in companies with intrinsic values that are well above the value implied by the price. Now, when again you look at a bunch of different sources, if they have a strong buy, a high buy, even a hold, things of that nature, value investors like Warren Buffett expect that the market will recognize the full value of an undervalued company, resulting in an increase in the stock price and also the profit for the value investor, which again is huge. Number 8, and possibly the 8th wonder of the world, understanding compounding interest. Now, Warren Buffett is probably the best example of the power of long-term compounding interest. He uses compounding interest, dividend reinvestment, and the power to consistently reinvest and have operating cash flow. Now, how powerful is it? A lot of people ask me about this, guys. Berkshire Hathaway has a 20.1% annual return since Buffett took over in 1964, which we know was a long time ago, compared to the S&P 500 at 10.5%. But even then, annualized 10.5% in the S&P 500 absolutely sounds incredible. That may not sound too spectacular, but look at these results. This has resulted in a 3,641,000% gain to your shareholders. That is right, guys, a 3.6 million percentage return of stocks by understanding exactly what he is doing. And the final one in here, guys, research and reflect. This is one of the, again, I know all of these are important, but you have to know the company that you're investing in. I do a lot of research. Again, personally, I do not buy individual stocks, but I know, and a lot of friends and a lot of investment advisors that I do know spend a lot of time investing and really researching stocks. What is coming up? What is Apple going to announce? What is coming up with artificial intelligence, with all of the chips, with NVIDIA? You know, holding a position in some of these companies, you have to know kind of what is up on the forefront and what to be looking at. So what stocks does Warren Buffett really look at? We're looking at Apple, Bank of America, Chevron, Coca-Cola, American Express, just to name a few. And I would be shocked if most of you, if not everyone out there, know exactly what these stocks are in, what kind of market they're in, using them in your everyday life. Now, again, one thing that I always consider, guys, is what do you use in your personal life? What do you find value as an individual? And how can you transition that into what do you do as an investor? For instance, I use Verizon phones, I use Apple products. That means that I should own some Verizon, I should own some Apple. Using both of those products and paying my hard-earned money out to them makes a logical sense for them to pay dividends back to me. So I'm getting a return on the goods and services that I currently use in my life, which again, do your research. I am not a financial advisor. I'm not licensed in that manner, but make sure that you know exactly what you're investing in and the companies that you're investing in. All right, guys, so that'll do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.